And this pie chart really shows a big change in our business here in Australia. When we first came here in 2007 or 2006, the figures actually showed that put my glasses on, the top three markets, Japan, USA and Korea, actually accounted for just over 90% of AMH's sales, which is incredible, absolutely incredible to have that. Today, those three markets account for 69%, but I think the most important thing, I think the pie charts really show it really nicely, is look at the diversification. Our business has actually grown as well. We've basically doubled the size of our business as well. So that is a very good example. And actually, on what Scott's saying about emerging markets, that's the proof. That's how important it is. And we don't sell that product to those markets because we like to, because it's the most profitable way to sell the meat. The most important one there is the others. You know, in 2006 we had 7. Today we've got 31. Still too little. I remember when I was in Brazil, I say in Australia we are blessed. We actually have approvals to export to nearly every country in the world. It's fantastic. When I worked in Brazil, we had a very small number of countries we could export to, and we fought so hard to actually get other countries approved to export our meat. I'll say that 2006, I think we were fairly lazy, to be honest with you. People will say, "Oh, Ian, we sold it there because it was given as the best price," but I'll challenge that. I don't think that's right. I mean, no other country in the world, as I know it, in the beef industry, sells full sets. Full sets is a brilliant way to sell beef. I wish we could do it in other countries of the world. Brazil, we don't do it. Argentina, United States, you just don't have the opportunity. It does make you slightly lazy in how you sell your meat. But I'm not saying that people were silly how they sell the meat, but I think you get a bit complacent. And I say the transformation is quite incredible there. And I would say in 2012, 2013, you'll see that continue. You'll see that shift away. Japan is still very important, still very, very important. And you have to put in that Japan figure. We bought a Meatworks Rockdale, which we renamed Riverina, which was basically Japan focused. That really skews our figures quite a bit. Japan would have actually been less if we didn't have the Rockdale business in there. But you see those other markets, Indonesia, a very important market, Malaysia, Papua New Guinea, and also Hong Kong, China, picking up as well. So what the opportunities for Australia, as we see it, Asia is on our doorstep. Indonesia being a very, very important market to us. The Indonesian live cattle, it must continue. It really must continue. We must be pushing hard for that. I think there's a sort of misconception that some processors were actually against live cattle. I'm for live cattle. I think it's great to get that. I want people to eat more beef in Indonesia. They eat more beef. That helps us. It helps everybody. The European grain quota is increasing to just over 40,000 tonnes in, I think it's in April or May this year. That's a big opportunity for us here in Australia to sell our grain-fed beef. High quality. Australian beef is really seen as right up there as quality. We get better money for that. That will help us with our diversification further away from Japan grain market and the Korean market. Russia, as I've already mentioned, incredibly. I mean, you go to a Russian supermarket, it's like wall-to-wall sausage. They use so much manufactured beef there. But also, we're selling. We had a joint venture company called Enalka in Moscow, and we had our own distribution centre there. And the amount of high-quality beef that was going up there was quite incredible. Into some of those Goodman's restaurants and some of the other high-class restaurants as the income levels increased in Russia. Middle East, I've already mentioned. South America, the growing influence on, and I've mentioned Brazil quite a lot. It's not just Brazil as a market for Australian beef, but it's what Brazil's doing with its own beef. You've seen the decrease in the exports out of Brazil. I think it will pick up again. But I think if you look what's happening in Brazil on the growing middle class, and when we say middle class, please don't think it's the same as the middle class here in Australia. It's not up there. That would be high class in Brazil. It is a growing, there's growing income. People are actually eating more products. And one big change actually in Brazil is the growth in convenience foods. In Brazil, we had, it was very common that most people had a maid because lots of, some of the poor people in the northeast of Brazil came down to the major conurbations, Sao Paulo and Rio. and they used to prepare the food for people. Well, those numbers of people are decreasing, so people have less time at home, so there's more demand for convenience foods, and so that's going to take up a lot more of the products which were being exported that we use within the market. And if you look at the global protein shortage, the beef cycle, I think you've seen we've already talked about that by the previous two speakers. How am I doing for time? Okay, I'm good. Okay. One thing I just want to spend a bit of time on: what's the threats for Australia, and these are real threats to our business. It's a big concern for us at JBS. We're in the fortunate position that we have operations in the United States, we have in Argentina, Uruguay and Brazil. We see the cost comparisons, and I see the cost comparisons every day. My counterparts in those countries gleefully tell me what their operating costs are on a monthly basis or a weekly basis or a daily basis. And it really scares me to see how expensive Australia is as a producer. There's no way we're a low-cost producer. We're not even a mid-cost. We're a very, very high-cost producer. And it's a real big concern for this country. So whilst we have all these opportunities, they're fantastic opportunities, we may not be in the ball game. We may not be in the ball game if we don't get these under control. We cannot continue to push back to the producer and ask him to accept less for his cattle, because he won't be there at the end of the day, because he's got the same pressures that we've got. We've got to look at our businesses and say we have to manage our businesses. We have to look at our businesses and say, look, we've got to run our businesses much better. We've got to become much more efficient in what we do. Our biggest cost, apart from, if you look at a piece of beef at the end of the day, it comes out of our meat plant, 80% is related to the cost of livestock. The other 20% is really we say our controllable costs. Of that 20%, 70% is labour. So that is goes labour, then packaging, and then goes energy and what have you. But our cost of labour here is incredibly expensive, incredibly expensive. To process an animal, to process a grass-fed animal in Brazil, if I look at very, very rough figures, process an animal in Brazil, a grass-fed animal would cost in the region of about $120 a head, Australian, depends on the exchange rate at the time, so let's say 120. Here in Australia, we're talking about 270. If I look at how you process an animal in the United States, a grain-fed animal in the United States is around about $150 a head. Here, we're over 300. Those are huge, huge costs that we have to absorb. And as I say, when people say, well, look at the cattle price in Brazil, look at the cattle price in the United States, and the farmer rightly says, the producer says, I want the same money as that. Well, there's no way that we can get to some of those prices. We'd love to pay more money for the animal, but we've got to get our operating costs under control. One of the biggest things, one of the big changes we've seen here is actually just on our enterprise bargaining agreements with unions and what have you, we've actually seen a big change over the last 7-8 months with unions because today we say, look, there's no way we can pay you 4 or 4%. Like, we couldn't do it in the past, but we accepted to do it. But anyway, they want 4 and 4%. We can't do it. We'll give you 2%, but we want a productivity gain to pay for that. Or give you 3% or 1% or whatever it is. But any increase has to be paid with a productivity gain which is measurable in the business. I like to say we've had surprisingly some good progress in that. There's still a lot of resistance in certain parts of our industry to accept that, but it's the only way we can remain competitive, and that's only keeping us still, keeping us stable where we are. And those things are a big concern. I say the unions actually have been much more open to that conversation. We've had some success, so I'm a bit more confident with that. I wasn't so confident a year ago that we'll get any of that sort of across the line, but which has been good. This carbon tax which has been put on us, it's going to hit us quite hard at JBS. We're talking about $8 million a year. That's direct from that. We've also got the extra cost in what it's going to cost in extra power charges. I don't think the government's done the figures. I really don't think they've done the figures on that. And again, that's a big concern to us. A threat for Australia, again, when the business is such a low-margin business, you have all these costs hitting you. one of the first things that happens is actually you cut back on your repairs and maintenance in your factories, or cut back on your investment, which actually makes you less efficient going forward. So you've got to have the power, you've got to have the courage of investment. I'm very pleased to say in JBS we've got fantastic owners who understand the business very well, and they're willing to invest, and we have invested huge amounts of money, more than $50 to $60 million a year in new money every year to actually make our plants more efficient. Another threat is this complacency. I think we've learnt the lesson for relying on the big three, and I think that's a big, we'll be pushing very, very hard on that. I know today people get excited about what's happening in the United States, the drop in the kills, and then people say, oh, well, we should export to the States. Interesting, I saw a graph the other day when you saw the very high CNF prices to the States compared to our dollar today. We haven't really moved very far at all. And I think we should be very, very careful that we don't just go back to the bad old ways, just relying on 2 or 3 markets. We should be out there all the time looking for opportunity, because there are there. The last one is this dear to my heart, this Korean FTA, no FTA, which has been a total disaster for our business. I think the industry did themselves no favours. We were very, very vocal that we should have accepted a deal. Didn't listen to us, didn't listen to many other people in the industry. That's a big problem for us. Korea is a very important market. We're now behind the 8 ball from March, and we need to get around the table to discuss with the Koreans to get an FTA on the table and get it signed up as fast as possible. I mean, I think our negotiation skills were very poor, to be honest with you, and I don't mind saying that, and I'll say it to the people's faces. And that really is a lesson of how not to negotiate, and I think it could come back and bite us very, very hard indeed. So I think, just in my conclusion, I think the beef supply in the next 5 years will be stable or a slight decline, because this is the beef cycle. Backing up exactly what Scott was saying about the emerging economies, strong growth in GDP, which is actually going to give us opportunities to sell our meat. We're in a great position to capitalise on it. We are in a superb position, but it's not going to come to us on a plate. And let's not be complacent to think it will. Let's not all walk away from it and say, oh, we're going to do really well in the next few years. Well, we've got an awful lot of hard work to do, and JBS is here to do that. Thank you very much.